This video is about repeating predictions. It's one of the manual prediction types that we've got. Why have we done that? Surely it's all automated. Well, 90% of it's going to be, but there are things that we just can't possibly know about your business. I wish that we could call it Futurely Psychic. I know this is my running joke, but we can't. We can't do this at this juncture. Maybe one day. But this is where you test out decisions before you make them. Please do it within the confines of your financial future before you do it, because you can see, well, the right timing for something, should it happen this month or next month, whether that's starting a new service sale, or you're selling a new product, or you've signed a new contract, or equally, cost cutting. It could be that you want to see what the impact of reducing costs on a specific date or a specific type are, or what happens if you don't make the sales that you wanted to make. So without further ado, let's go and have a look. Right, we're in Josie's Florist. This will be your organization, of course, and we're just going to look at shop sales. So as you may have, if you've watched any of the other videos, you know that for every single account, we've got a prediction line, and the predictions, there's another video explaining how we do all of this, so I'm not going to go into that. But if you want to toggle it off because you think, actually, I know more than you do about this, and I want it just to be my predictions, totally fine. You can do. You'll see there's just a strike through. We don't get rid of the row, so that all of those calculations are going to still happen, and you'll be able to see what the predictions are saying, and you can click on any of them to see why that they're happening as they are. But if you want to turn the predictions on at any point, you can. You can also leave them on and overlay them with your own new predictions. So I'm going to hit add, and I'm going to hit repeating. Now, the clue is in the title. So this is for shop sales today. And I'm going to maybe say, well, we've got a new shop that we're opening, and hit next. Okay, so what happens then is you have the activity screen and the cash impact screen. The activity screen we're going to start with first. This is where it's going to hit your profit and loss. So Futurely Predict, again, it's not just about cash flow, gross cash flow and those movements. Yes, it's your final output, but it's also calculating your profitability and your total spend, sales, etc. So in this instance, I'm going to make it super simple so that we can see the movements really clearly. I'm going to say that we're going to do £1,000 in this instance. We're in the UK, it's a UK organization, so it's pulling through the pound sign. If we were in the States or Australia, you'd be seeing a dollar sign here. The repeating pattern, let's just keep it again simple, and we're going to choose monthly, but there are daily, weekly, quarterly, and annual options for for the repetition. Start date, well, should we make it? We'll just make it for today, which happens to be the 26th of August. And do we want to continue this forever? We can do. Do we want to end it on a specific date? We can do. Or we can say we want to end it after a couple of repetitions. That's the first one. If I want to do 3, I'm going to add 2 more to it. So we're going to put it after 2 repeats, okay? It could equally be 2 weeks, 2 months. You have those options too. This is where you can then say, well, okay, so we started off with £1,000 or dollars a month for 3 months. But actually, what happens if we increase it by an amount? Can do that. Or we can increase it or decrease it by an amount. If you want to, if you're decreasing it by an amount, you would just put in a negative. So let's put in negative 10% just for the sake of seeing it flow through. In this instance, we've got 20% sales tax or VAT in the UK as the option. This has been set here in the settings area. If it was a 0% rated purchase or sale, you would put 0 in there to override it. It could be a 5%. In the UK, we have gas, for instance, is not 20%. So that's where you would update the VAT or GST settings if you needed to. If not, leave it as the default, and that's going to be calculated for you. And then we're going to go into the cash impact. So all of this here is going to hit the profit and loss. Then when's it going to get paid? Is it going to get paid on the same day? Is it going to get paid in a few days' time? So again, just for just to be able to see the calculations flow through all the way through Predict, I'm going to choose 30 days here. Now, there's another video in this series, a couple after this video, so I think it's 3C in the predictions series, which takes you through this section here. So just watch that. It's a couple of minutes long, but it will explain all of it. I'm going to go and hit update. And we can see Excuse me. Great, a sneeze in a video. I'll have to cut that out. And we can see that our new shop has reduced by 10% here and then 10% here, right? It's not 10% of the original amount. It's looking at the previous amount and reducing 10%. So that's hitting the profit and loss. That is right here. If we go to our income section, profit and loss, there we go. We can see it right there and how that's impacted our profit. If I look at the cash collected and paid for that account, I can see that the GST, the 20%, has been added on and it's hitting the bank account 30 days later, as we said. Now, just remember, for each of your accounts, you have, we're aggregating all of your customer payment information. Shop sales, I'm going to guess, if I hit this, it's, well, what do you know? It's a shop, it's retail, you're being paid on the same day. So you can use this as a guide, actually, because every single one of the accounts, you've got this information is being calculated for you, which can sometimes be shocking in some instances, unfortunately, or fortunately, as the case may be. But that's a really great guide for you. So where else is this flowing through? Again, if I go back to the home screen, you can see we've got the cash collected view as well. So we can see the gross cash flow amount and when it hits the bank. If I go back to the financial section and look at the balance sheet and open this up, we can see that if I scroll to the bottom, we've got our new shops here. So there we go. There's the bank account. So we can see that impact in the bank. And I can also see that in our accounts receivable, it's hitting the new shop. It's hitting the accounts receivable, trade creditors, whatever your account's called, just in the way that you would expect it to do so, because you've got incomings and outgoings for that account for those periods. And then finally, if I go to the VAT in current liabilities, or GST, of course, or sales tax, whatever it's called in your locale, you'll see that those calculations have come through as well. Click of a button, all of that's done for you. Why would you use a spreadsheet? Those are repeating predictions in Predict.